Good afternoon, and thank you for joining. This is Michelle Savage with XBRL US. You are here for our webinar on data quality rule set number 11 and the impact of errors on SEC filers. I'm just going to quickly go through our agenda for today and then cover a few logistical points. We're first going to talk a little bit about the XBRL US Center for Data Quality and the Data Quality Committee. And Joan Berg, who's the chair of the Data Quality Committee, the DQC, will be leading that presentation. Joan is also director of XBRL Services at Topan Merrill. Joan will then lead us through a discussion with Pranav Ghai. Pranav is the CEO at CalcBench, and he is also a member of the XBRL US Data Quality Committee. I'm going to cover a couple of CPE questions because, as you know, we are offering a CPE for this session today. So if you have signed on for CPE, please make sure that you respond to the questions that are asked by clicking on the radio buttons that you see on the screen. And if you did not sign on for CPE, but you're still interested in getting it, go ahead and answer those questions because we can process your questions and make sure that you receive the CPE credit if you're interested. We're then going to turn over to Campbell Pride. Campbell is president and CEO of XBRL US, and he will be walking us through the 11th Data Quality Committee rule set. Finally, I'm going to cover a couple of CPE questions, and I'm also going to walk us through a demonstration of how to participate in public review, how to check your own filing for Data Quality Committee errors, and then we'll talk a little bit about some upcoming events and programs that you might be interested in. So one other logistical point, we talked about CPE a little bit. If you do have questions, please feel free to post your questions by clicking on the Q&A link at the top of the screen. Everyone, with the exception, of course, of our speakers today, is on mute, but you can post your questions and we'll take them throughout the presentation. So with that, I'm going to turn it over to, actually, I'm going to continue talking a little bit about the Center for Data Quality, because I think it's important to help everyone understand sort of, where the Data Quality Committee rules come from. And the Center for Data Quality is a consortium of public companies, service providers, and data users that came together initially back in 2015. And the mission of the center is to address the public's concerns about the quality and usability of XBRL financial data filed with the SEC. So the focus of this group is really on funding the development of rules. So the preparers have freely available rules that they can run against their filing and identify issues that are resolvable and that should be resolved, frankly, before they go to the SEC. The members of the Center for Data Quality today are the representatives that you see listed on the screen here. So we have representation from the AICPA, from Topan Merrill, and Topan Merrill is also a founding member of the XBRL US Center for Data Quality. Donnelly Financial Services, DFIN, is also a member, Altova, Certent, RDG Filings, Workiva, Broadridge Financial Services, DataTrax, and P3 Data Systems. So we want to thank all of these organizations for their support and their support for data quality and improving the data quality of SEC submissions. So with that, I'm going to turn it over to Joan Berg. Joan, again, is our chair of the Data Quality Committee, and I'll turn it over to you, Joan.
Okay. The Center for Data Quality formed the Data Quality Committee in 2015 to address concerns about data quality issues that adversely affect data consumption and analysis. And the committee prioritizes issues based on input from users, as well as suggestions received from standard setters. The committee develops rules and guidance regarding disclosure topics and publishes this throughout the year at regular intervals. The exposure dates expected to be issued in 2020 are May 1st to June 15th, August 1st to September 15th, and November 1st to December 15th. The committee also provides regular updates to the SEC staff and the FASB about the things that we're working on. And on the next screen, you can see who the current membership of the Data Quality Committee is. It includes software providers, data consumers and tool providers, registrants, analysts, and permanent observers from standard setting groups. This group provides valuable direction to our efforts. And now I'm going to lead a discussion with Pranav Gai, who's the CEO of CalcBench. And the first thing I'd like to start with, Pranav, is to ask you to tell us a little bit about CalcBench and how you work.
Hi, Joan. Can everyone hear me?
Yes?
Okay. So thank you to XBRL US, to you and to the Data Quality Committee for having me today. A little bit about CalcBench. Alex Rapp and I started the firm in 2012 officially. We sort of, we spent 2011 playing around and trying to see if there was actually something here that we could use. And the reasons for starting the business are that we, in our prior working careers, we used a lot of financial data in our jobs, and we paid a lot of money to access that data through legacy providers. And when someone came to us, someone being Campbell, and said, you know, we've got this data set available for people to use, we said, well, you know, look, how much is it going to cost us? And he said, it's just out there. You know, it's part of XBRL US's offering. And we just kind of looked at each other and scratched our heads and said, how can that be? Because, you know, the big providers are charging, you know, $20, $40, $80,000 a year to get, you know, to give people access to this data. How are you guys giving it away for free? And then we figured out how, and we said, well, look, we think there's an opportunity. So late 2011, we started sort of cobbling together some rudimentary screening tools and a sort of a rudimentary is probably the right word, web interface, that kind of thing, and looking at the data. And we realized there was something here. And then we just started writing code, writing use cases, and we began. And then here we are, fast forward now, almost 8 years later, and you know, we've still got a pretty decent business going, and we're happy to be part of this community.
Okay, that's interesting. So today we're going to talk really about the errors that we find in XBRL filings and how they impact your ability to use the data. And one of the most frequent errors that we find is using the wrong sign, entering a negative number for a value that should always be positive. I think you have an example of that you can show us.
Sure. It is on a slide that, just waiting to queue up here. I don't think I have control over the slides here. Okay, there we go. There it is. So this is an example of a negative value. The XBRL tag line of credit in the 2018 year-end filing for this particular company, and we've the point here, I just want to stress, the point is not to embarrass a particular company for, you know, something that they mistagged. That's defeating the purpose. The point here is that we found it and had to fix it. If we hadn't done that, this number would show up as a negative value. which, you know, if you look on the right-hand side in the pure XBRL, it is. And it's not a small company doing this. We've obviously anonymized the results, but you can see you're actually looking at an S&P 500 sample here. So this company may be a household word to an investor. In fact, it is. But when you're looking at things like balance sheet quality, lines of credit are an aspect of that, and we just want to make sure that, you know, we get the proper information to people if they're using these data points, you know, to build a model, to do some screening, or simply just read footnotes. Whatever it is, we want to make sure that the data is presented in the proper way. And to give people an idea, this specific metric, of the firms that reported it, every single firm reported a positive value. This particular firm reported a negative value. So it sort of stuck out like a sore thumb. And when you are doing analysis, anything, when you're looking at distributions or when you're looking across groups of companies in a cross section, anything that sticks out like a sore thumb is something that gets someone's attention. And this got our attention, and that's how we found it.
Okay, so if they had run the DQC rules, DQC 15 identifies elements that should never have a negative value. And we encourage everybody to run those rules before they're filing so that they can catch this kind of common error. We also have a lot of other rules for common errors. I sent you an example that had reported errors on 2 different rules of our cash flow statement. But it turned out that what the problem in the filing was that they had an unnecessary extension for the total change in the cash on the statement of cash flows. And I'm wondering how that looked in your software.
We got a slide for that too. I'm fairly confident. Well, so just a little background here. This is just, we provide a report to filers if they want to just come to CalcBench and take advantage of it. You can get access to your own, what we call our filer portal. It doesn't cost anybody anything. And if you want to, you know, get access to that, just ping us and we'll help you to do that. The point is that extensions and extension rates are something that we monitor. And what happens specifically with extensions is if you're, there are reasons to have an extension. But when you do that, I just want to sort of explain what the impact to the end, to the user of the data is. The extension is not mapped to a economic or financial concept unless someone does that. And we try to do some of that. But if you have this extension and other firms are using a standard tag, for example, if it's available, you will be out of consensus with those companies. And if they happen to be in your peer group and somebody does a screen of your peer group, there'll be a hole in, you know, in the data. And so it just looks like you as a company don't disclose that number or that concept. And so that's the kind of thing we want to avoid. So this is an example right here of a company that, you know, on their cash flow statement, and again, we're not going to identify who they are, but they're real. They used these tags in their Q in the third quarter of 2019. And so many of the things that you see here could probably be mapped to tags that are part of US GAAP. So if you go to the next slide, you'll actually see that in that particular case, there's a big hole, right? So that this company, again, we're anonymizing this, and this is their peer group. So these 5 companies are self-identified peers of the company that Joan mentioned, or she didn't actually mention it by name, but it's the one she was referring to. And you see the big red circle there indicate that, well, it looks like the number's missing. When in fact it's not missing. It's just an extension that was used. I hope that's clear.
So in this example, what you're showing is that the last company, they had cash flow from operations, but they weren't showing what the total change in cash for the period was. So that just comes up as a hole in the data. And would you interpret that as a 0 then, or
We would interpret, well, so what we would tell somebody is, if they're really interested, go and look at the actual cash flow statement and see what you see for that particular company. Go and examine it directly. But if you are doing a quick screen, yeah, it shows up as a 0. It shows up as a null. It's just not there.
Yeah. Okay. So that was a case where I looked at this company and I could see that back in 2017, they used an extension because they were including the restricted cash in the total. They were preparing their cash flow statement on that basis. But that element became available in the 2018 taxonomy as a standard element, and they didn't make the switch. They just kept that extension in their filing. So, that's something that our rules can't necessarily detect. Although, as I said, this did come up because we do have a rule that says the total change in cash has to be represented by one of 4 different elements, and since none of those elements appeared in the file, I found this. But other extensions, we may not be able to have rules for all of those types of things. Okay, so we also talked about scaling errors and some of those errors that your software identifies. Do you have any information on any of that you can share with us?
We do have in the same what we call our filer portal that I mentioned before, we track scale errors. I don't think I built a specific slide on scale errors, but I'll give you an example. You see this error a lot in things like shares outstanding, when somebody tags shares outstanding that are supposed to be, sometimes you'll see shares outstanding in the trillions when it's supposed to be in the millions, and it's a million times a million. And so it too, when you see something like shares outstanding in trillions, by looking at the distribution that it's a far right tail number. Nobody really has shares outstanding in trillions, at least not yet. And what that does, if you've reported that and then an end user goes and does a division or a per share calculation using a trillion share outstanding number, it's going to suppress the ratio, because if you just did EPS, for example, earnings per share, using a GAAP net income value divided by shares outstanding, and your shares outstanding were supposed to be in millions when it's in trillions, you're going to get a number that's scaled 1 million times less than it ought to be. And that, if you then put that into some kind of, analysis, it's going to be meaningless. So we try to fix that when we see these things coming in. And then we also, on occasion, have been known to send emails to companies, just say, hey, guys, you got this wrong. Can you fix it, please? So it does cause issues for our client base. So all that said, the data that is coming is very, very well received. It's being used. We're really happy to report, so one of the things, I don't want to focus on all the things that are missing and then, make it sound like I'm being some sort of crazy Pollyanna here. The data is being used. It's very appreciated. It's being used by more and more people, certainly than when we started the company. And we've been doing this now, like I said, for 7 or 8 years. So unless I was a goofball, or a, or a mercenary, I wouldn't be doing this if we didn't have a working business. So that said, we do definitely want to thank people and firms for submitting this data, because it's, the quality is getting better. We just want to keep improving it. And it's very, very valuable. Firms, investment managers, the sell side of Wall Street, they're using this. Other, corporates are using this in the C-suite to do benchmarking, which is fantastic. We love all of that. So I just want to point that out and be very clear that the data is being used. We just want it to keep getting better.
Yeah, that's good to hear. Can you show us any of your software?
Yeah, I'm happy to. I just need to be allowed to drive. Can someone pass me control?
Pranav, you should be able to share your screen now. If you just click on the share link,
Okay,
we shall see on the Zoom console.
On the Zoom console, give me half a second here.
Sure.
Share. There we go. Thank you, Michelle. Okay. So this is CalcBench right here. Can everyone see that?
Yeah.
Okay. This is our homepage, and you can just come in, and once you register, get right to work. I'm sure a fair number of you have done this. We do offer a 2-week free trial to anybody who wants to come and take a trial. There are people that come take trials and then sign up under different email addresses and take trials again. We know who you are. So we just ask that you talk to us if we reach out to you. So that said, there are many ways to consume the data. You can use it through this web interface. You can go through our Excel add-in if you want. You can, if you're daring and are a big firm, you can use our API. We support all of these things. I'm just going to show you guys a couple of very basic things. You have to come in here and, we'll pick a company, something very basic. Not that I'm picking on anybody. I never pick on anybody, but I just like these guys. So, you can come in, you can say, okay, I want to look at Johnson & Johnson's income statement. I'm looking at annual data right now. If I wanted to switch to quarterly, I would just click that radio button right there. I've gone to quarterly. If I want to change it and look at their balance sheet, I can do this by clicking on the balance sheet. Cash flows, simple, similar information, all of these kinds of things you can do. All these buttons are available to users. So for example, accounting people like to look at data with the most recent data on the left-hand side. Financial analysts like to reverse the order and have everything on the right-hand side. So we provide a button here that reverses the order, that kind of thing. Again, we just encourage people to come in and play. If you want to start stacking companies and looking at groups rather than individual companies, so if you wanted to look at J&J versus Pfizer or Sanofi or someone else, you go to our multi-company page over here. And I'll show you how you do that. So Oh, and by the way, for those of you paying it, if you look through here, if you mouse over these things, these line items, you'll actually see the XBRL tag that was used. And then we mark extensions as non-FASB. You can see that here on my screen.
Oh, yeah.
Okay. So those are some basic type things that we do for people. You can export directly out here. You can export the whole set of statements. If you click there, it'll just drop it into an Excel workbook for you right on your desktop. So I'm just going to go very, very quickly through this. And Michelle, if you want to cut me off at any time, just do so. Just let me know. So I've now gone to the multi-company page here. And what I'm going to do is it's because I was looking at J&J, it just dropped J&J here. But I'm going to actually just say, I want to look at peers for J&J. So I'll come into, I did that kind of fast, but I'm going to go to our choose companies area here. I'm clicking on that. And there are lots of things you can do. You can pick a canned index. You can actually enter a list of symbols here by clicking on this enter ticker list, and you just drop, cut and paste symbols in there. I'm not going to do either of those things for this purpose. I'm just going to say, okay, I want to find peers for J&J. And so it'll take the SIC code. If I click there, it'll actually find 2834 and put those 793 firms in. A lot of them are really small firms, so I can even, if I go to screen filter here, I can, even cut that list down further. I'm not going to do that right now, but you can, say something like, I want to screen by companies that have assets. I said I wasn't going to do it. I'm just going to do it anyway. Companies that have total assets by clicking there greater than $1 billion. So that 793 is going to cut down to somewhere maybe 100 companies or so once it finally gets done. Whoops. That's not right. Well, if it were working, you'd get down to about 93 companies. So anyway, the point is, that was silly. Let's just go to something we know. You come up with 4 metrics that are canned for you. And then again, you can change periods by doing that. You can add more metrics. If you wanted to do research and development expenses, just add them here. It'll come up by typing data in. If I wanted to add something like here, income tax credits for research, I can click on that. And if anything comes up, it'll show up, and then I can sort it. And this is pretty neat. I can actually trace these metrics. So if I click there, it'll actually find the section of the document where that came from and show it to you. So this is interesting because this is in a paragraph. So we got lucky. It found the data point, gave you some context, and now you can do all kinds of things with it. Usually this is when I'm giving people demos, this is where I usually stop and ask for questions. But I'm going to just quickly show you here the disclosures page, where again, we're going to stick with the S&P. And if you wanted to say, look at, accounting policies, note 1, here you go. Here they are. You can just literally start pointing and clicking, and you're going to start getting new ones. So I'm looking at Adobe's accounting policy from earlier this year. If I wanted to go and compare it to the previous period, I could go and do that. It's going to give me a red line sort of thing where it says, okay, this is anything in red is what was deleted from the prior year document. Anything in green was added. So you can just go and spend hours doing this. People do. But it's all here for you. And this was my point earlier when I said that you know, we focus on a lot of the data quality issues, but once we get it right, these are the great things that you can do with it very, very quickly. So that's all that. Again, these are the notes to the financial statements by topic. You know, if you want to switch to business combinations, you can just do it and you'll get it, you know, all the business combination footnotes right there. It's that easy. And then lastly, you can, if someone wants to come and play, they can just sign up for our trial, and you can just go through each of these sections yourself if you want. The filer portal is what I was mentioning before, and I'll show you how that works very quickly. A lot of you may be interested in that. If you come in here and you pick a company, it's going to load up the page, and it'll show you, you know, things like scale errors. And here's one. You know, these are older, so that's good in that the company made these errors, but they have corrected them over time. So you can also get extensions, for example. So you see here in their 10Q filed just a few weeks ago, they had 130 extension tags that applied to 377 facts. And then if you click here, you can actually, it'll open it up and tell you what those were. You can wait for a second. And then, like I said, we can just spend hours and hours doing this. We do. So, you know, that's CalcBench.
Well, that's really helpful. That's interesting to know how our data is being looked at by you, and others, I assume, are doing something similar. So thank you for taking
You're
us
quite
through
welcome.
all of this, and also for showing us this filer portal, because I imagine a number of filers would like to take advantage of that opportunity to look at their data. Okay, I think, Michelle, we'll turn it over to you for CPE questions, right?
Yes, that's great. Thank you so much. Yeah, let me pull up my screen here. Okay. And, oh, I don't think I'm sharing my screen. Sorry, bear with me a second here. Okay, so I think we're going to take a couple of CPE questions before we move on to the next section, which is going to be a focus on the actual rules. So we're going to take two CPE questions right now, and you should be able to see this on your screen. So the first question is, how many public reviews of new rule sets does the Data Quality Committee plan to conduct in 2020? Is it 2, 3, or has it not yet been determined? So we'll give you another 40 seconds or so to respond to this. And just keep in mind that with each new rule set, there's a public review conducted for about I believe it's a 45-day period, and which is, of course, what we're in the midst of right now. Okay, so we're going to take another 10 seconds. And actually, I've gotten a question that might be interesting to ask as we go into the next question. But let me end the polling on this, and we'll go to our second CPE question. Okay, so the second CPE is, which of the following is represented as permanent observers on the Data Quality Committee? Is it preparers, securities analysts, data and tool providers, or standard setters? So again, if you're getting CPE credit, please make sure that you respond to the question. And let me take the question that we received from our audience. With the mandate of inline XBRL, have you seen any impact to XBRL quality yet? I think one of the key rationales for inline XBRL was that the expectation that it would improve the quality of the data reported. And I'm just wondering, Joan and Pranav, if you've seen any kind of impact so far with the move to inline XBRL.
Pranav, I'm going to let you answer that.
I muted myself. So I think I'm off mute now. We've seen, we've seen it. It's hard to sort of tear these things apart. We've seen improvement in the data quality over the years, and the DQC has some really, really terrific slides on that. And I don't know, I don't think that it's hard for me to say whether that's related to inline or whether it's just related to people paying attention to the data quality rules, or whether it's, people getting used to having to do this, because this was a big change when it came down the pike. But we have seen improvement. More significant improvement, I think, directly is attributable to the data quality rules. But inline is, it's not a magic bullet, but it certainly has been helpful.
That's great, thank you. And it may, in some cases, it may be a little bit early to tell, because I believe right now we're still in phase 1 of the rollout, correct?
Yes.
Okay. So it'll be interesting to see how that fares going forward. So Joan and Pranav, thank you very much. We're done with our 2 first polling questions, and we're now going to go on to the next portion of our webinar. And I'm going to turn over to Campbell Pride, who's going to talk a little bit about rule set number 11. Campbell, you want to get started?
Yes, thank you. Thank you, Michelle. So we currently have a public review that we are starting for rule set 11. And this rule set is doing a number of updates in the number of focus areas. One of the primary focus areas is taxes, and the second area is getting people ready for the lease disclosures that they're going to be doing at the starting in 2020. Predominantly, some people have already obviously early adopted, but we've added some rules just to make sure that some of the errors that the FASB's seen, that we've seen, don't propagate through all the filings. So we're going to be adding some rules for that. And this public review is intended to basically float the idea of some proposed rules that we will hope prevent some of these errors from occurring. So we'll talk about those briefly. And then also for taxes, we've seen a number of errors that we're seeing in taxes. It doesn't cover taxes completely, but just some of the high areas of error that we're seeing there. So that's the 2 main areas of focus. However, there was a couple of these first 2 that you can see on the screen here. There were some updates we did to some existing rules just to address some issues we were seeing. And the first was a change to DQC1. And what this rule does is it basically looks at the axes that are being used in the taxonomy and some of the members that are being used on those axes. And this rule here is just really an update to that to add another axis for business combinations, and just to really make sure that when people are reporting business combinations that they're using an extension member with that to indicate the name of the acquisition that they've done during the period or for the report. The second item is an update for negative values for IFRS filings. This is really to address, if you're an IFRS filer, some additional negative elements for the 2019 IFRS taxonomy. So we added some for that, and there were some other slight updates to remove some elements that we knew could be negative. So we go to the next slide. So these are pre-existing rules that were updated, not new rules. So some of the new rules that we have here is the first one is for deferred tax assets and liabilities. And there's a number of rules here, but the main idea behind these is just to try and clean up some of the elements that were being used on the balance sheet and some of the elements that were being used in the notes to the financial statements. And you can see here, and this is all on our website, and you can go and look at this, and it basically in more detail if you like. There's certain elements for deferred tax assets and deferred tax liabilities that should only be used as in notes to the financial statements. And these you can see here, just these first three, like deferred tax assets, liabilities net, deferred tax assets net, deferred tax liabilities. The intent is that these elements should only be used on the notes to the financial statements. And the reason for that is because these elements are being reported without jurisdictional netting. So that means you can't net the liability against the asset across jurisdictions. So the FASB requires that you report those in the notes to the financials. And then on the face financials, the elements allow jurisdictional netting, so you can use those elements. But what we see is a lot of these elements that are in the notes to the financial statements are being used on the face of the financials, and some of these elements that are face financial elements are being used in the notes. So it kind of implying that they don't have jurisdictional netting on them. So this is the point of this rule, is to really try and clean this up, so people are using the right element in the right place. And this can cause a lot of confusion for people when they're trying to use the element to do analysis. They're not necessarily going to be getting the element they thought, because they're including netting when they shouldn't have been, or they're not including netting when they thought they were. So this rule, there's a number of rules here. This rule, you can have a look at that, all the details of it, and what it's trying to do as part of the public review. But that should make a lot of people who are trying to do analysis, and there are a lot of people trying to do analysis on deferred tax assets and deferred tax liabilities, make that a lot easier for them to do. So we can go to the next slide. So the next rule this is DQC 86, and this is transition tax elements. So there are a number of elements in the US GAAP taxonomy that were used in the past for tax disclosures. However, they can no longer be used. However, they are still in the taxonomy, but the FASB's put them in a separate section of the taxonomy, saying, look, only under certain special circumstances should you be using these. So companies still continue to use them. They haven't gone back and updated their filings for the new tax elements that they should be using. So this rule just basically points those out and basically indicates if you're using the old elements and the new element that you should be using. So this rule is really to help filers. You should run these rules so you can identify if your filing needs to be updated, so you're no longer using those transition tax elements anymore. So the second area that we were focusing on was the changes for the lease standards, and there's a number of elements that were added to the US GAAP taxonomy for operating leases and for finance leases. So there's obviously a lot of retagging that's going on. And so these rules predominantly will only run for the 10K or a 10KA or a 20F filing. And this first rule is just really the breakdown of operating lease liabilities across financial statement line items. In some cases, you may have the operating lease liability. It may appear in other liabilities, or maybe it's in some other account that you report in the financial statements, but you haven't reported the operating lease liability amount. So the FASB has some guidance on how to do that, and this rule is just really intended to basically facilitate that. So if you're reporting an operating lease liability and that's including other lease liabilities, you're supposed to use this extensible list item. So this rule just says, look, you've got an operating lease liability, you don't have it in the financials, you've got it buried in some of the line items, so you should be using this extensible list. So this basically, this rule is really to help you follow the FASB guidance that they've already issued. So we go to the next rule. The next rule is operating lease cost and expense. So the FASB had noticed that some people in their quarterly filings had been reporting the operating lease expense, but not the operating lease cost. So this is really the cost of both the capital portion and the expense portion. So you're supposed to report both of those. So the FASB just wants to make sure that people do. So this rule is basically there just to make sure that if you're reporting the operating lease expense, you're also reporting the operating lease cost. And usually picking the right tags to report those. That's DQC Rule 88. Go to the next rule. Invalid elements used on the range axes. So what this, if you put the Q&A down, I think I see that, Michelle. This next rule is really, so there's an element for the lease element for the weighted average remaining lease term, and folks had been using that element to indicate with the range axes to basically say this is our minimum lease term, this is our maximum lease term, but the nature of the element, the weighted average lease element, is not really meant for that. That's supposed to be the weighted average of all of them. So this rule just basically looks where this weighted average remaining lease term has been used with the range axes and just indicates that you shouldn't do it. And if you do have an element which is just really the minimum, you know, the leases, the remaining term of the leases, or a minimum and maximum, there's a different element you should be using, and the FASB is adding an element for this in the 2020 taxonomy. So this rule just really alerts you to that fact. Okay, we go to the next one. And this rule, incorrect calculation of lease liability payments due. So as part of the lease standard, there's a reconciliation between if you total amount of future payments you have on your lease, then you discount those back, you should get back to what your operating lease liability is. So this rule is just basically making sure that reconciliation adds. So the difference is the undiscounted amount. It has a name as the operating lease liability undiscounted excess amount. So it just checks that calculation works. And one of the reasons we added this rule is because we've seen some filers have used inappropriate elements for this, or created extension elements, or deducted the finance portion from the operating lease portion. So really it's just really this just acts as a sanity check on that. So that rule's there as well. So have a look at that, and if you're doing your filing, run these rules and then see if they're available on our website now. You can run them, so it might be helpful just to make sure that you address some of these lease issues. Go to the next slide, please, Michelle. So then I can hand it back to you, Michelle, and you can just do a demonstration on how you'd go about doing that.
Great, thanks very much, Campbell. Yeah, and as I'm pulling up, I'm going to go online and show you how to check your check results. But first, we did receive a question that I wanted to pose to the group here. Are there timeframes set for providers to enact the DQC rules? And I think this gets into kind of the effective date for rules. So I don't know if Joan or Campbell, if you want to weigh in on that question.
So the transition rules are effective, the tax rules, the tax transition elements and the tax elements are effective immediately, I think, or in December. And then the other rules will not be effective until after the 10Ks are filed. Or no, that's not right. These rules are all going to be effective for 10K filings. Is that correct, Campbell?
That's right. That's correct.
And I think, Joan, typically, don't we publish the rules with a specific effective date for the rules? Because we want to give the vendors, obviously, time to incorporate the rules into their software. Okay, so let me go ahead and I'm going to walk you through a couple of things and show you where you can actually look at the public review and see the different rule sets that Campbell just walked you through. So if you go to our website, you can actually just click on data quality, which you see up here in the little gray box. And then if you look at the navigation on the right-hand side, you'll see a section called Filing Results and Quality Checks. Check your filings with data quality rules. And then you'll also see public exposure of validation and rules. And I'm going to go there first, just to show you some of the rules that we've been talking about. So here you'll see, the public review period began in November, and it's going to carry through to January 3rd, 2020. And this gives you a sense for the type of information that we're looking for. What concern might you have with a particular rule? If there is a concern, how should it be revised? How does a revision that you suggest improve the usability of the data that will be reported? And then you can go through here and actually click on each of these individual rules and get a little bit more information about each one. And I think one good way of reviewing the rules is to actually run your own filing against the rules. So if we go to check your filing with data quality rules, this will allow you, first you have to just click through on the terms of use, which just indicate that you agree to the terms and that, let's see. And if you look in this gray box here, it shows that you can check the rules with check your filing rather with approved rules, or you can also include public exposure rules. Okay, so I'm going to go ahead and check on both and then choose a file. And here I'm going to pull in a sample filing. And you can see that it's dropped in right here. It's a zip file. So this is like any other, you could pick a previously submitted, SEC filing. And then if you just click on filing, check filing, what's happening is it's taking that XBRL instance document and running it against that entire set of rules. So it's, going through quite a few rules right now, and it's checking not only the rules that are approved, rule sets 1 through 10, but it's also checking that 11th rule set. And this will give you a good opportunity to identify errors that may be based on the new rules, and that'll give you an opportunity to weigh in and let us know what you think. Did it provide you with information that is helpful, or do you have an issue with that particular rule? And maybe it's not providing the information that you need. So here, it kind of comes back with a report that tells you this is from DQC 81. It's an approved rule. This is the effective date. Remember, we were just talking about effective dates. And then it gives you a little bit of information about the rule itself and what it found in looking at your filing. And so here, let me just glance through here. I think this is all based on approved rules. So we didn't find any of the new public review rules. But this gives you a good idea for what kinds of errors might pop up. And so that will give you some information that you could use potentially in weighing in on the public review. And remember, the more input we receive to the public review from filers, from vendors, from data providers, from analysts, the better those rules are going to be, because we want to make sure that there are no false positives, and we want to make sure that the rules are clearly understood and can be resolved very easily by issuers. One other thing that I wanted to point out is when we look, let's see, we can also look at aggregated real-time filing errors, and this will show you error types that we've identified and how they're tracking over time. And then let me just go back here a bit. And something new that we've recently added is something we call filing results and quality checks. And this is an application that actually looks at existing filings that have already been submitted to the SEC and checks through to see if they've triggered any of the data quality rules. So for example, if you look at just this first one, and again, as Pranav was saying, we're not trying to call anybody out here. We're just using this as a tool to help people understand what kinds of errors are occurring. So like this one has 18 errors in the 10Q issued or for the period ending September 30th, 2019. You can look at the details here, and you can see all of the different errors that have been generated or triggered really in this particular filing. So this is something that you may want to take a look at. You can look at the most recent filings, which is what we're reviewing here. You can actually search on a filing. Let's see, we'll look at say, Facebook. And this pulls up, Facebook filings and identifies whether or not there have been any particular errors. So this is really interesting and helpful tool that, that you can use to check filings. So now I'm going to go back to our slides again. And let's see. And we're going to go to some CPE questions. So I'm going to open poll question number 3. And I'm launching the poll now, so hopefully you can all see this on your screen. So which of the following rules were newly created in the DQC 11th rule set? Was it negative values for IFRS elements? And remember, this is what are the following rules that were newly created. So not updates to existing rules, but newly created rules. Was it element values are equal, axes with inappropriate members, or invalid elements used on the range axis? So which of these possible rule types is something that was newly created in the DQC? So we'll give it another 15, 20 seconds here. And we do have some new questions, so I'll take those after I finish the last poll. Okay, so that was poll number 3. Now we'll go to poll number 4. Okay, so here DQC Rule 88 is designed to help filers be consistent with the FASB XBRL implementation guide. The rule identifies situations where a value is reported for operating lease expense, but a value is not reported for which of the following elements? Is it for lease cost, operating lease cost, or operating lease payments? So we'll give it another 30 seconds or so here. Okay, in about another 5 seconds, and then I'm going to take a couple of questions that we've received. All right, I'm going to close the polling now. Okay, so just a couple of questions. The first question, which I think any of you can respond to, is if deferred tax assets and liabilities are disclosed as separate line items in the balance sheet, can we use the same elements as the footnote?
The answer is no. Even though the values are the same, the required disclosure on the face of the financial statements is to have it with the jurisdictional netting. And in the footnotes, it doesn't have jurisdictional netting. So for some companies, that doesn't make a difference, but it's still 2 different concepts. And so different elements are used in each place.
Great, thanks very much, Joan. Okay, the next question, regarding tags for leases, right to use assets and liabilities, it seems like there's only GAAP tags for operating leases. If a company has capital leases, should an extension be created?
There is an element for finance lease right of use assets. They're no longer called capital leases, so they're in a separate section of the taxonomy under Section 842. I think if you look there, you'll find the elements that you need. And more elements are being added in the proposed 2020 taxonomy as well. So keep an eye out for that as well.
Okay, great, Joan. That's very helpful. The next question, is there a set limit of how many extensions a company can use?
I don't think there's a limit. I think that, as Pranab was saying, the more extensions you use, the less useful your data is. So if you're trying to disclose, if you're trying to meet the spirit of XBRL, you're going to limit the number of extensions that you're using.
Great, thank you. And then here's a question that I think, Campbell, might be for you. Are there protections around data submitted if we were to submit and check pre-filed XBRL? Or do you recommend only doing this with filed information? So I think the idea is if they come to our website and use the error checking mechanism, are there any protections around that data?
Yeah, so we have a like an SSA 16 that we can make available, like equivalent to like a SAS 70 type report, and that kind of details that out. So if you're concerned about that, you can get that. You can ask that. We can get that to you. Secondly, there is also software that you can download and run it locally on your own machine. So if you're nervous about sending that data, even with that, after looking at that report, so just in general, any information that's submitted, no information's actually. We don't actually store any of that information. We don't actually write any of it to disk or anything like that. It just kind of comes in. We process it and send the results back. We don't know. We know the only details we know about that filing was who submitted it, and the name of the file that was done, and then we have a summary count of how many errors were there, just so if someone has a question about it, they can ring us up. We've got that minimal amount of detail, but we have no details of the actual contents of the filing whatsoever. None of that's maintained. So, but that's all detailed in the document that we make available to you. Or alternatively, you can just download the RL software and run it locally as well.
Okay, the next question. How can I find out if a vendor I work with is aware of and if their software is up to date with the latest DQC rules? And I think, I can respond to that question. We do certify software to be able to successfully run the rules with the appropriate responses and error messages. And you can actually find that on our website under certification, software certification. So we do post that, and it does indicate which rule set they are able to comply with. So
yeah, I would just add to that all the, and we're working with all the software providers at the moment to get them pretty much up to the latest version. So even though those versions are there, you should definitely contact your software provider and ask them about it, because some of them have actually got that enabled, and we're just working on the certifications for them as well. So definitely contact them, contact us if you have any questions about that.
Yeah, and one kind of easy check is if you're looking at a vendor that is one of the members of the Center for Data Quality, you can rest assured that their software is up to speed with the certifications, because they're the first ones to get their software certified. Okay, we have one other question related to running the DQC file check and selecting public exposure rules and approved rules. But it's a very specific question. I think maybe we'll try to answer that one offline, because it's just kind of how something appears on our webpage. So I think that's all of our questions. I'm just going to go to a few mentions of some upcoming events that we want to let everyone know about. We recently published for public review a new handbook called the XBRL Taxonomy Development Handbook, and it's a guide for taxonomy development. There's a lot of legislation outstanding right now, and a lot of activities that point to the need for new taxonomies and new types of data standards. So we have developed a pretty comprehensive handbook that walks through what to consider when developing a taxonomy, and actually how to go about building a taxonomy. We're going to be holding a couple of webinars. Our first one next week is for members only, and that is Taxonomy Development Handbook Public Review. And then we're going to be holding a public webinar on January 8th, 2020. So you should get information about that. They are posted online, and we also encourage you to check out the Taxonomy Development Handbook itself, which is up there. It's available for public review. Anyone can download the entire thing, or just look at it on the web and post your comments. Let us know what you think. We're interested in areas where there's content that may be missing, where content needs further clarity, where there are things that you may even disagree with if you're on the development side. So please take a look. It's really important because we see this as something that is going to be key going forward. And then the last thing I wanted to mention is other programs is the XBRL API, which if you have not yet checked it out, please do so. We have a number of templates. We have a number of different ways to use the API to extract data for both US GAAP filings as well as IFRS filings. And with that, I think that's our webinar for today. We've run out of time, and I want to thank everyone for coming. And thanks so much to Joan Berg with Topan Merrill, who is also the chair of the XBRL US Data Quality Committee, and Pranav Gai, who is CEO of CalcBench and founder as well, co-founder, who is also on the committee, and Campbell Pride, our CEO and president at XBRL US. So thank you, and we hope to see you on our upcoming webinars.